Most bowling centers start thinking about insurance renewal 30 days out before your policy expires. By then, almost every advantage is already gone. The carriers know you're stuck. The brokers know you're scrambling. You take whatever quotes you can get that show up on time because you're out of time, typically. The owners who pay the least and get the best coverage typically start at least 90 days out. Let's go through that timeline real quick. Day 90, pull your loss runs from every line of coverage. Property, general liability, workers' comp, liquor liability, auto, umbrella, cyber, whatever policies you've got. Loss runs are the most important document in your renewal because they are what the underwriter looks at first. Read them yourself. Look for open claims that should have been closed a year or two ago. Check for reserves that look way too high. If a claim shows $50,000 reserved but the actual exposure is $5,000, get your agent or broker to push the carrier to drop that reserve before the renewal data goes out. Day 80, update your exposures. Pull your year-to-date sales and project for the rest of the year or the rolling 12. Pull your payroll. Update your building value if you have done any renovations or added any equipment. If your sales are up 15%, your premium will go up no matter what. Knowing this in advance prevents panic. Day 70, walk your property like an underwriter would. Take pictures, lots of pictures. Check your roof, check your parking lot with a critical eye. Those gaps, those cracks in the parking lot, yeah, those are problems. Check your fryer and your grease trap. Do you have any dirty rags laying around? Check your cooler and freezer temperatures. Check your fire extinguishers for expired tags. Check your exit signs. Heck, check all the signs. Do you have the lane approach signs where they belong? Do you have that big sign at the cash register that basically says, hey, there's inherent risks associated with bowling? By your very act of being in this building and throwing a ball down the lane, you accept some of those risks? Yeah, you have those signages. Those are all important. Anything that looks neglected gives an underwriter a reason to raise your rate or decline you. Now, day 60 before your renewal. Sit down with your agent or broker and have a renewal strategy conversation. Not a quote conversation, a strategy conversation. Which carriers are we approaching? Which ones are we not? And why? What is the story that we are telling about your business? A clean account with rising sales and good loss controls needs a different pitch than an account with a recent claim and some turnover on your staff. Your agent or broker should know that story and be able to tell it effectively. Day 45, your submission goes out. Your agent or broker selects the ideal underwriting people, the right markets, the submissions that they're going to target. Not a phone call, not a sloppy set of papers, not a partial submission, a complete package with 5 years of loss runs, current exposures, a statement of values, supplemental application, and a cover letter with an executive summary that explains your account in detail. If your broker sends a sloppy submission, you're going to get a sloppy quote. There's no way around it. Day 30, quotes come back. A great agent will crunch the data and provide you with a walkthrough. Here's what to ask your agent about. Don't compare the bottom line numbers until the end. Compare the coverage forms. Are the deductibles the same? Are the limits the same? Are the exclusions the same? A cheaper quote that excludes assault and battery, or that has a higher deductible, or that strips out employee dishonesty coverage is not cheaper. It's flat out a different policy. Day 7, decision time. Pick the carrier, bind the coverage, sign the agreement, make the down payment. Make sure you have your certificates of insurance for your landlord, your vendors, your league sponsors. Make sure they're all up to date. Day 3, confirm your binder. The binder is your proof of coverage until the official policy issues, sometimes a month or two later. Read it. Make sure the limits and endorsements match what you think you bought. Binders sometimes have errors that nobody catches until a claim appears. Day 0, policy is effective. New term begins. Here's why this timeline matters. Every step you skip costs you leverage. You start at 30 days, you can't fix loss runs. You can't improve your property maintenance. You can't tell a story, you can only react. Set the calendar, block the time, run the timeline every year, the same way every year. Your premium is a function of how prepared you are, not how lucky you are. If your insurance agent isn't talking with you about these topics, you may want to hire a professional who empowers you to make smarter decisions about your insurance. RiskWell is proud to be endorsed by the BPAA as an insurance partner for members across the country. Check the link below to connect with us, or you can call our office at 469-678-8001. Talk soon.